A quiet crisis is unfolding, not on Wall Street, but in the cargo ports of Shanghai. Containers once filled with silver are now sealed, held back by one government order. And across the ocean, one man is smiling. Robert Kiyosaki. While most people scroll headlines about gasoline, elections and tech stocks, Kiyosaki's buying silver at $100 an ounce and warning the end of the dollar isn't fiction. It's arithmetic. To most, silver is jewelry. To the global economy, it's the bloodstream of modern life, powering solar panels, electric cars, and the chips driving artificial intelligence. And right now, that bloodstream is being choked, not by shortage alone, but by policy. Let's rewind. In mid-2025, China quietly restricted exports of critical metals, gallium, germanium, and soon afterward, silver. Official reason? National interests and preservation of resources. Translation: they don't want the West controlling their industrial future. Overnight, the world's top refiner of silver shut the tap. Supply chains trembled. Prices jumped. Analysts said it was temporary. Kiyosaki said it was structural. He called it the moment the silver market woke up. You might ask, why would a best-selling author in his 70s keep screaming about a metal most investors forgot decades ago? Because he doesn't see silver as a trade. He sees it as exit money, the lifeboat when paper currencies sink. Since then, the US dollar has lost over 85% of its purchasing power. Groceries cost triple, college tenfold. Yet the dollar still looks strong, until you price it in something real. In 1971, 1 ounce of silver bought 5 movie tickets. Today, even with modern wages, it still buys 5 movie tickets. That's not random. That's the metal whispering the truth about inflation, politely, quietly, consistently. Now let's bring in some uncomfortable math. Global silver production sits around 890 million ounces per year. Industrial demand in 2025? 1.2 billion ounces. That's a deficit of over 300 million ounces, drained from storage each year. Inventories, once 2 billion ounces deep, are sinking fast. At this pace, visible vault supply runs dry within 4 years. Imagine what happens when paper traders, the ones who trade 200 virtual ounces for every real one, try to claim delivery. The shelves go bare. Prices detach from screens. And those still holding silver contracts learn the hardest lesson in commodities trading. Promises don't shine. Kiyosaki started buying physical silver when it was just $20 an ounce. Not coins to flip, but stacks to store. He said $100 silver was inevitable, not because of hype, but because governments can't print metal. Every new trillion in stimulus, every round of debt buybacks, every bailout, all it does is inflate paper and deflate trust. The dollar dies not with collapse, but with replacement. And here's where China's export ban ties in. When the world's workshop stops supplying the raw materials of industry, prices don't rise, they rebase. So, does $100 silver mean hyperinflation? Not necessarily. It means the unit of measure, the dollar, is losing its definition. We measure wealth in dollars because it's convenient, but convenience has a cost: blindness. When China holds resources, BRICS nations settle trades in local currencies, and US debt crosses $40 trillion, money becomes a negotiation, not a promise. That's why Kiyosaki isn't betting on silver's brilliance, he's betting on the dollar's decay. Funny thing is, the same people who laugh at his predictions end up buying silver when it's already doubled. Then they call it a safe hedge. That's like showing up to Noah's Ark during the second storm and asking about tickets. But Kiyosaki isn't alone. Institutions are quietly following. In mid-2025, private holdings of silver ETFs dropped 18%, while physical deliveries to storage vaults spiked 42%. Money's leaving paper, moving to metal. Someone's preparing, silently. Quick question for you. If the dollar really starts failing, where would you park your faith? Precious metals, crypto, or something else entirely? I'm curious to see how people are thinking about real assets versus digital trust. Drop your perspective below in comment box. It's turning into a fascinating divide lately. And if you like uncovering these hidden shifts before the mainstream headlines do, make sure you don't miss the next deep dive we're building. Subscribe our channel. Let's follow the chain reaction if silver crosses $100. Manufacturers panic first. Electronics prices soar, solar panel costs double. Governments might label silver strategic and restrict exports themselves. That pushes prices higher still. Meanwhile, nations holding stockpiles, China, Mexico, Russia, suddenly gain bargaining leverage greater than any trade treaty. It's no longer about investing, it's about power. This has happened before. In the 15th century, Spain built an empire on silver. The flow reversed centuries later when China demanded silver for all trade, effectively forcing Europe to pay with metal. Money left the West, literally shipped east. Fast forward to now, and history rhymes. The new silver routes run through Asia again, except this time it's digital, blockchain-tracked, state-owned, and export-controlled. Every ounce withheld by China tightens global liquidity like a squeezed vein. Most economists still dismiss Kiyosaki's dollar death talk as alarmist theater. But ask yourself, how long can a currency survive when its debt grows faster than its productivity? When the signal of value is drowned in political noise? When even allies start trading outside its system? The uncomfortable truth. Currencies die the way people go bankrupt. Slowly, then suddenly. Silver is boring until you need it. It doesn't yield, doesn't innovate, doesn't promise growth. It merely endures. And endurance, in a financial hurricane, is an asset class of its own. Kiyosaki isn't betting on excitement. He's buying time, stored in metal form. There's irony here too. The same Western banks that ridiculed silver bugs for decades now quietly insure their portfolios with physical holdings. What they mocked publicly, they accumulate privately. If that's not a signal, what is? The final twist? When silver's price climbs, it challenges every assumption about money's meaning. Because if silver's real price is $100, what does that say about the dollar? It says that the measuring stick has shrunk and everything else stayed the same size. It's not silver gaining value, it's the dollar admitting loss. Maybe that's why Kiyosaki's strategy sounds radical, because truth often echoes like conspiracy just before it becomes consensus. The world is moving from paper to substance, from promises to proofs. Whether you stack coins, own miners, or just observe, silver's rise isn't speculation, it's reflection, a mirror showing the dollar's age. And when mirrors crack, you can't fix them with more ink from the Fed. So why is Kiyosaki buying silver at $100 while others still call it overvalued? Maybe because he doesn't care about today's price. Maybe because to him, the real premium isn't on silver, it's on certainty. And certainty these days is finite. When a nation begins to print belief faster than it earns trust, the metal always wins. The question isn't whether silver hits $100. The real question is, when the dollar expires, what will you measure your world in?